This is Nightly Business Report with Bill Griffith and Sue Herrera.
Rally on. Stocks surge as the market decides a trade war is not something it wants to dwell on, at least not right now. Focal point. Tomorrow's jobs report will have the market's full attention as the conversation starts to shift to economic growth. We have the expectations. And gear shift. More and more automakers are going all in on SUVs and trucks. Sound strategy or risky business? All that and much more tonight on tonight's edition of Nightly Business Report for this Thursday, April the 5th. And we do bid you a good evening, everybody, and welcome. I'm Bill Griffith. Sue is off again this evening. The beat goes on. After yesterday's more than 700-point reversal from bottom to top, stocks extended the rally again today on Wall Street as investors once again put aside fears of a trade war. The Dow rose another 240 points today, closed at 24,505. The Nasdaq added 34 and the S&P tacked on 18. But the focus is about to shift now to jobs as the government's monthly employment report comes out tomorrow. Today we got a warm up with the weekly jobless claims. The number of people filing for first-time unemployment benefits rose by 24,000 last week. That was a little more than was expected. But the more important continuing claims, which tracks the number of people currently on unemployment, that still remains near 45-year lows. But the big number is out tomorrow first thing, and there will be a lot of attention being paid to it, including by policymakers at the Federal Reserve. Steve Leisman tells us what we might expect.
The market tomorrow may be forced to make some tough decisions about whether good news is good news when it comes to jobs, or could it be bad news for equities? And then it's more complicated than that. Which part of the news is good and which part is bad? Here are the expectations for the jobs report tomorrow from the government. March non-farm payroll seen rising 178,000. That's after a very strong 313,000 in February. The unemployment rate seen ticking down by 0.1% to 4%. Average hourly wages seen a modest rise of 0.2%. The ADP number we got on Wednesday was up 241,000, more than expected, pointing towards a strong report. And the three-month average of job growth has risen to a 17-month high of 242,000. That's far in excess of the growth of the working age population. Over at TS Lombard, economists there say, quote, the great U.S. job creation machine is back gaining momentum. At the Licio report, they note a growing number of state revenue contacts. Those who count the taxes coming in are suggesting an acceleration in wage growth may be playing a role in strong withholding tax growth. The market right now priced for two more Fed rate hikes this year, one in June and the other sometime in the fall. A third hike, or the fourth one this year, is seen as a low probability event for now. But the job report tomorrow could change those odds. For Nightly Business Report, I'm Steve Leisman.
And wages were something that J.P. Morgan CEO Jamie Dimon mentioned in his annual letter out to shareholders this morning. In it, he wrote, I believe that many people underestimate the possibility of higher inflation and wages, which means that they might be underestimating the chance that the Federal Reserve may have to raise rates faster than we all think. Mr. Dimon also said that he wants the same outcome as President Trump in regard to trade, but that he would go about it in a different manner. Let's turn now to our guest, Dan Roth, for more on the employment picture and what he's expecting in tomorrow's big jobs report. He's editor-in-chief at LinkedIn. Dan, thanks for joining us tonight.
Thanks for having me.
The 145 million users on LinkedIn, you believe, give you a pretty good sampling of the jobs market, and it tracks pretty closely to what the Bureau of Labor Statistics reports on a monthly basis. So what are you expecting to hear tomorrow about the March jobs number?
Sure. Well, that's 145 million in the U.S., 540 million worldwide. But when we look at those U.S. numbers, what we're seeing is a nearly 20% increase in hiring year over year last month, and a 3% month over month increase. When we look at what's going on with people updating their profiles, saying where they're working, hiring is still very hot. We've seen double-digit hiring rates every month for the last 7 months. Don't expect that to slow. So I think the BLS numbers probably will show something similar. You know, the train doesn't stop in its tracks. The hiring has been so hot lately that it's more likely to keep up than it is to slow down.
Where do you see the hiring going on? Is it still white collar, or maybe a lot of more construction? What do you see happening here?
Sure. Financial services has been the hottest for the last couple months, and insurance, and then it does get a little bit more blue collar. manufacturing, autos and aerospace, and building have been some of the hottest. Construction have been some of the hottest sectors for the last few months.
Now, is this cyclical, what we're seeing here, or did something else happen to spur the kind of job growth we're seeing right now?
I think it's been a number of factors. One is people were waiting the last year or so to see what happens in the economy, what was going to happen with the new administration. And for the last few months, there has been a feeling that in the spring of last year, there was a sense tax cuts were coming, deregulation was coming. Companies started opening up their wallets a little bit and hiring more. And then the stock market has been rising, so it makes it easier to decide to invest in the future. All of that has kind of fueled the animal spirits of hiring managers. And once you start hiring, you have to replace people. You know, someone leaves, they get poached, they leave. You got to replace their position.
Right.
So this hiring tends to beget more hiring.
Boy, I have I have a lot of questions, but I'm running out of time here. Do you see more older workers being able to find jobs that they weren't able to find after the financial crisis?
It is clear that as companies need to fill positions, they have to start thinking more creatively about who they want. They can't wait for the perfect person. They have to take chances. Maybe raise rates, maybe look outside where they're located, or have more remote workers. And I think the idea of hiring more senior workers, people who might have different skills, and trying them out in this job is something that employers are trying to do, because they've got to get people into the seats to start doing the work that needs to get done.
Okay, before I let you go, very quickly. So last month, huge number, 313,000 jobs created. What do you think tomorrow's looks like?
Well, I'm not going to pull out the crystal ball, but I think it's going to be an up number. I think that it is going to look good from more people are going to be working than we're probably expecting.
Okay, you're not going to give me a number, but that's okay. I don't blame you. Dan Roth with LinkedIn. Thanks for joining us tonight.
Thanks a lot.
Meanwhile, the trade deficit rose to a nearly 10-year high in February as both imports and exports picked up momentum. The Commerce Department reported that the trade gap rose by more than 1.5% to just under $58 billion. The trade deficit with China actually fell, but it is still up about 20% this year so far. Elsewhere on the trade front, the U.S., Canada, and Mexico are apparently moving closer to a deal on a new NAFTA agreement. Kayla Tausche tells us about that tonight.
Speaking in West Virginia, President Trump expressed some optimism that a NAFTA deal could get done.
We're working very hard on NAFTA with Mexico and Canada. And, we'll have something, I think, fairly soon.
But he downplayed reports that there could be a deal reached by next week's Summit of the Americas meeting in Lima, Peru.
They said, let's have NAFTA before. I said, don't rush it. Take it nice and easy. There's no rush. We get it done right, or we'll terminate.
Time is running out for a deal to get done. Any agreement faces a lengthy approval process in the U.S. Congress. Elections are upcoming in Mexico, and popularity there is growing for the anti-American candidate. And U.S. midterm elections could also create uncertainty. Negotiators from Canada and Mexico were meeting with American counterparts in D.C. Here's Jared Kushner entering USTR's office with Mexico's foreign minister this morning. Speaking to reporters from Quebec, Prime Minister Justin Trudeau also sounded optimistic.
I believe we're in a moment where we're moving forward in a significant way. Hopefully, there will be some good news coming.
Sources say the three nations are getting closer to a deal on the amount of U.S. parts in automobiles. And there has been progress on reducing protections companies get for investing in foreign countries. White House advisor Peter Navarro says it wants to cut trade deficits, but the ultimate goal is free trade.
When it comes to trade, the vision here, the strategic vision, is to get to a world not dominated by massive trade imbalances driven by unfair, non-reciprocal trade practices, but rather to a world of free trade.
Top trade negotiators have a dinner scheduled tonight and plan to meet again tomorrow. But even if an agreement is reached, it would be in principle only, with much of the fine print still to be worked out. For Nightly Business Report, I'm Kayla Tausche in Washington.
Time to take a look at some of today's upgrades and downgrades. We begin with Stifel downgrading Intel to hold from buy. The analyst there saying the company could face pressure as the upgrade cycle for its computer server business peaks. The price target stays at $53 a share. By the way, at the same time, Stifel said that it was seeing an opportunity for rival AMD to pick up PC market share, so the firm has upgraded AMD to buy from hold. Intel closed up 0.75% to $50.38. AMD added 2.5% to $10.02. Barclays upgraded Dow component Merck to overweight from equal weight, citing bullish prospects for its key lung drug Keytruda. Price target there was raised to $64 from $62 a share. Merck shares were off a penny, though, to $54.43 today. And UBS upgraded Citigroup to a buy from neutral. The firm, believing that the risk reward for owning Citi is now positive, says the profitability in its global consumer banking division should grow from here. Price target was raised to $80 from $78. Citi closed at $70.22. That was up more than 1% today. And UBS also raised fellow bank Wells Fargo to buy from neutral. The analyst, while acknowledging the reputational challenges that Wells still faces due to its fake account scandal, said the shares are at a discount compared to its peers. But UBS did cut its price target on Wells to 60 from 63. And today's shares finished at 53.26, up a fraction. Now back to that story that's been taking up all the oxygen over the past few weeks. That would be tariffs. While the stock market seems to feel that the salvos by the U.S. and China will not lead to a trade war, but instead are all part of the negotiation process, you would never know it by the Chinese state media, who seem set on winning the PR war. Eunice Yoon has more from Beijing for us tonight.
If you only read the Chinese state press, you'd probably believe that Beijing just bested the Trump administration. That's because the official press here has been reporting that China has just won the first battle in the U.S.-China trade war. The papers here are citing President Trump's tweet in which he said, "We are not in a trade war with China," and quoting Commerce Secretary Wilbur Ross on CNBC, where he suggested that these actions are all headed for negotiations.
I think it's very difficult to put a specific time denomination on negotiations that are as complex as these.
The People's Daily posted a commentary bragging that China's tariffs, which target many agricultural products, have hit Trump where it hurts, and said Beijing's quick counterattack has caught the U.S. administration off guard. The China Daily also ran an editorial saying the U.S.'s climb down shows China can't be coerced. The background of this is that President Xi Jinping and the Communist Party have been trying to portray themselves as a defender of Chinese interests against the West. That's the image they're selling to the public and the state media, and they can't be seen as backing down. However, according to the official state media, that doesn't mean that the door isn't open. According to the China Daily today, if the Trump administration is open for negotiations, then it's time for Trump to give up the useless tariff weapon. For Nightly Business Report, I'm Eunice Yoon in Beijing.
China's proposed tariffs are certain to impact the energy industry as well, but not where you might expect. And our Jackie DeAngelis has that part of the story for you tonight.
China is targeting two areas in energy with proposed tariffs, propane and ethanol. While both products are exported in relatively small quantities, China is a rising consumer. The U.S. Energy Information Administration reported last year that China consumed a little less than 15% of U.S. propane exports. Tariffs would make propane more expensive when imported. That would make it less attractive to buy. From the Chinese perspective, the risk to the propane market, prices could take a hit. Less demand means more supply, and oversupply pushes prices down. Meantime, the Chinese could get their propane from OPEC-producing countries, namely Saudi Arabia. From an ethanol perspective, exports to China from the U.S. were just getting started because China's looking to expand its ethanol blending by 2020. Tariffs would make U.S. ethanol less attractive, and there are other places the Chinese can look for it, like Brazil, Europe, and Canada.
Well, Chinese buyers of U.S. ethanol and propane will have to cut imports because of the higher tariffs. So that is going to translate into less demand, and that will certainly impact the price of ethanol and propane. That should push prices lower as that demand has waned.
What's interesting is that crude oil isn't on China's list. Analysts say that's because the global oil market is so large, if China stops taking U.S. crude, other countries in the region will, and it won't have a negative effect. The tariffs hit red state producers directly, and analysts say that's no coincidence. Places like Texas, Oklahoma, Louisiana, and Wyoming for propane, Nebraska, Iowa, Indiana for ethanol. For Nightly Business Report, I'm Jackie DeAngelis.
Coming up, America's seemingly insatiable appetite for trucks and SUVs is driving auto sales and causing car makers to accelerate a new strategy. We will explain. Saudi Arabia's Crown Prince Mohammed bin Salman is meeting with Silicon Valley executives today. This visit is, of course, a part of a multi-week U.S. tour that the prince hopes will spur investment and economic development in his kingdom. Michelle Caruso-Carrera looks at what has been accomplished so far.
First stop for the Crown Prince of Saudi Arabia, Washington, D.C., for a meeting with President Trump.
Thank you, Mr. President.
Followed by stops at Harvard and MIT with big plans for technology investments. Next, New York City. Dozens of events, including a last-minute late-night press conference, signing what they said was a $200 billion solar energy agreement with SoftBank's Masasan. Plus a day-long event with American CEOs where they announced more than $20 billion worth of memorandums of understanding with companies like Google and Raytheon, and held a panel on the changing role of women, which included the head of the Saudi Stock Exchange, Sarah Al-Suhaimi.
Are you going to learn to drive?
Yes, of course I will. I'd love to have the choice.
Then off to the West Coast for meetings with Boeing, Richard Branson, Jeff Bezos, Satya Nadella, and Bill Gates, among others. Dinner with the royalty of the West Coast, media executives Rupert Murdoch, Bob Iger, and Oprah, too. This as Saudi Arabia dramatically opens up to foreign entertainment in the kingdom, going from zero to big bucks, including an agreement enabling AMC cinemas to operate in the kingdom after a 35-year-long ban. American companies thus far seem happy to sell goods or movies in Saudi Arabia, but will they be willing to invest the big capital in the country that it needs to truly grow?
When it comes to those deals, those memorandums of understanding that were announced, there weren't a lot of details given to the press, so it's hard to know just how meaningful they are. The bottom line, the Crown Prince is trying to change the country's image when it comes to the general public, but also the investing public. And a key question is, did he put to rest the concerns about rule of law in the kingdom after he put hundreds of royals in prison at the Ritz-Carlton in Riyadh, accusing them of corruption? Whether this trip achieves what he wanted depends on whether or not we see real investments in the kingdom in the future. For Nightly Business Report, I'm Michelle Caruso-Cabrera.
Weaker corn sales hurt results at Monsanto, and that's where we begin tonight's market focus. The seed company sold less corn because there were fewer farms in the U.S. growing that crop. Overall, though, revenue came in lower than expected. Profits did see an uptick thanks to strength in Monsanto's soybean and cotton businesses, but those results were also below expectations. Monsanto's shares were up more than 1% today to 118.05. Delta and Sears said that they were impacted by a cybersecurity breach that may have compromised customers' payment information. The breach occurred last September at a software company that provides online support to both Delta and Sears, and the two companies said that they have launched an investigation to determine the extent of any damage. Delta shares rose fractionally to 54.21. Meanwhile, shares of Sears climbed nearly 3% to 297. Software company NetApp said that it was launching a $4 billion share buyback, and it's raising its quarterly dividend. Company said that it was hiking its dividend to 40 cents a share, and shares rose more than 1% to $62.90. Cleaning products maker WD-40 reported higher profits after the bell, but sales were a little light. Company said that it expects sales to rise between 7% and 9% this year overall. Shares were volatile in after hours. They ended the regular session up 1.5% to $133 even. And thanks to a strong appetite for SUVs and trucks, Ford and GM plan to stop making 3 car models here in the U.S. Ford says it will shift its focus by 2020 to make more high-margin SUVs and trucks. But is this a good strategy, and how would potential tariffs play a role? Joining us to talk about it tonight, David Whiston is an auto analyst at Morningstar. David, thanks for joining us tonight.
Good evening.
I'm fascinated by this story. Ford, for example, says that 90% of their sales by 2020 will be trucks and SUVs. Is this a demographic play, or what's going on here?
Well, the whole U.S. industry has been moving away from sedans and into light truck models, which are pickups, minivans, crossovers, SUVs.
Right.
Back in 2009, it was about 45% light truck, and last year we were about 65% light truck. The really big winner here is crossovers. That would be things like the Ford Escape. They were about 35% of the market last year. They gained 230 bips of share just in 17 versus 16. The loser is midsize sedans, down 230 bips.
So, and yes, the thing is that we're buying the SUVs and the trucks and the crossovers and the smaller cars because of the gasoline and the electric cars and so forth. But what happens to those sedans that were a staple for so many years, like the Taurus, which apparently is in danger now?
Right, it really could be the end of the era. GM, for example, is rumored to possibly be nixing the Impala, although nothing's been confirmed yet. And so Taurus and Impala, for example, that's full-size sedans. Last year for new vehicle sales, full-size sedans were just about 1.5% of sales. All the highest volume is actually in subcompact, mostly compact cars, really. And on the subcompact side, Ford's rumored to be getting rid of the Fiesta. And then the big staple is the stereotypical mid-size sedan, the family sedan, a Ford Fusion, a Chevy Malibu, Toyota Camry,
right.
Honda Accord. That segment's losing share, as we were just discussing a moment ago, to crossovers. The reason to your question here is really Americans don't have to compromise anymore on space versus fuel economy. You can get the best of both worlds in a crossover, or if you want to go really big, you go up to something like a Ford Expedition.
So quickly, before I let you go here, I mean, I can remember in the 60s and early 70s when they were going, Detroit was going big on bigger cars, and then we had the gasoline impact when the prices went sky high and they had to make the smaller cars. Do they risk that again, do you think?
There's definitely risk when you're making a mix shift that drastic. The thing is, really, nobody expects gas to ever get higher again. Obviously, there is history here with the oil embargo and whatnot, but you've got all this fracking going on. You've got a lot of excess supply, and frankly, between that and powertrains getting more fuel efficient and a mix shift over time to hybrids and pure electric vehicles, no one's really expecting sedans to be that dominant anymore.
All right. Fascinating. David Whiston with Morningstar. Thanks for joining us tonight.
Thank you.
He's back. For the first time since 2015, Tiger Woods is at the Masters, and that is good news for golf. We'll tell you why. The Masters teed off today, and the golf industry is abuzz as Tiger Woods makes his first appearance in the tournament since 2015. And as Dominic Chu tells us now, Tiger's return is proving to be a big boon for golf.
There is no other time of the year that's more exciting for the game of golf than now. The Masters is the game's first major championship, and there's more buzz this year, thanks in large part to one player.
Tiger Woods, who's had a lot of adversity in his life, to come here now and possibly win a major. I didn't think he'd ever be able to do that with all what he went through, and it just shows what a competitor he is. So he's got a good chance to win, and we need him to win because he brings out the people, the media, the sponsors, the public, everybody. You can see a vast difference in ticket sales.
According to data from Ticket IQ, the average resale price of a weekly pass to attend the Masters this year is nearly $7,700. That's more than double what it was last year. But the impact isn't just limited to what's happening for patrons this week.
Tiger's presence in everything is undeniable, right? The energy he brings to the sport, the awareness he brings to the sport, the attention he brings to the sport is simply incredible, right? And we've talked about that at length. Specifically for TaylorMade, he helps us quite a bit.
That echoes what industry research firm Golf Datatech found in a recent study, which showed that interest among golfers to buy new equipment is the highest in 3 years. The hope is that interest is taking hold in a younger and more diverse set of potential golfers.
Junior golf has increased substantially over the past 10 years, number one, from just a raw number standpoint, but number two, and maybe more importantly, the face of junior golf has changed. Today, 33% of junior golfers are girls, and 24% of junior golfers are minorities. And so if you buy the premise that junior golf leads ultimately to adult participation in the game, you're going to see the face of golf change over time, and we're very encouraged by that.
The future of golf will depend a lot on getting more people to play the sport. And if Tiger Woods and others provide a drama-filled week at the Masters this time around, it could be a big shot in the arm for the entire sport. For Nightly Business Report, I'm Dominic Chu in Augusta, Georgia.
And before we go, let's take a quick look at the day's market action once again. The Dow rising another 240 points today to 24,505. The Nasdaq added 34. The S&P tacked on 18. That is the Nightly Business Report. I'm Bill Griffith. Thanks so much for watching, everybody. Have a great evening. We'll see you tomorrow.